welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. Monsoons mean pleasant rain, hot cups of tea and your favorite snacks. But they also mean waterlogged roads, at times flooded streets and a heavy downpour that can damage your car or home or even both. This week on Money, 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 we get you rain ready with the right insurance coverage to take care of such possible eventualities. Joining me now on the show are Raghvendra Rao, Head Retail, Future Generali India and Financial Planning Expert, Harshvardhan Roongta. Thank you, gentlemen, so much for joining us. So, right now we haven't gotten that severe downpour, which is why I think it's a good time to just make sure that we are prepared, because we've seen times, I mean, there are those typical 2 or 3 days every season when specifically the southern or the western parts of the country go completely down under, and many a times we're not prepared. So let's talk about first things first. Mr. Rao, let's start with the car, because that's the first prized possession that ends up running into rough weather, so to speak. Sir, so a typical car insurance policy that anybody has, would it typically cover any sort of rain associated damage?
Yes, all the comprehensive policies which cover own damage part will cover the damages due to rain, flooding or inundation or any calamity associated with the water damage and such things.
Okay, let me actually break this down even more, because what's happened in the last 1.5 years is that since the policy itself changed, and now, by the way, in case you haven't bought a new car, maybe you don't know, if you are buying a new car or a new two-wheeler, when it comes to the third-party insurance, the mandatory part of insurance, you need to take a 3 or 5 year cover, depending on whether you're buying a two-wheeler or a four-wheeler. And then there is own damage. And my understanding is that in the last 12 months, the market went through its sort of, permutations and combinations, and you have all kinds of policies available. You can buy the compulsory TP or a comprehensive or just the own damage. First and foremost, what's happening in the motor insurance market and what kind of products are really selling now?
Actually, if you're buying a new car, 3-year third-party cover is compulsory, and own damage cover you can take either 1 year or 3 years. No, it depends what you want to choose. You can take 1 year OD cover and 3-year TP cover is a must. So you can have the combination of 1+3 or 3+3.
Okay. And if you're taking both together, then that becomes your comprehensive cover policy.
If you're covering own damage and as well as third-party cover, it becomes a comprehensive policy.
Okay, so even if you've taken a standalone own damage, which maybe covers only 1 year, typically this rain and flooding issues would be covered in
it will be covered for that particular year.
Okay.
So every year you have to renew the policy.
Okay. Opening thoughts, Harsh, on when it comes to motor insurance, because we've seen these changes in the products themselves. How one should look at making sure that you're adequately covered.
Surabhi, there are two elements as we've been speaking. First is the third-party liability insurance, and then the own damage. So as the word clearly says, the government is stating that the third-party insurance is a long-term insurance. So it goes with the vehicle to say that you'll have a 3 years or a 5 years cover. So there is no possibility of you missing out on the renewal, because of which a third-party liability is compromised. So that part is taken care of. Why does a person take an own damage policy? Let's understand that. So because there is a considerable cost that has gone into buying that car. If your vehicle gets damaged due to accident, due to or gets stolen, theft, or it gets damaged or gets submerged in water, there is considerable amount of cost that you will have to incur to get that repaired.
Sure.
Now, to take care of that, you're buying this own damage policy, and which has its own terms and conditions. Like as Mr. Rao said, that all the damages, because we're talking rain specific, all the damages that are likely to affect the car because of rain is because if your car is submerged in water and all those things. Now, interestingly, there is additional features available in case people want to opt for them. So they are add-on covers. So like you have an engine secure. So engine, covering your engine. So usually the biggest problem is that when your car is submerged in water or stagnated or put in one place, and then the first thing as an owner of the car you'll try and do is get into the car and start it.
Before I get to that, because this is something that was very interesting, even I learned I think only 1 or 2 years back, that please do not try and start your car if it lands up in water. That's your lesson number 1 and most important. Why are we saying this? Let's take it step by step. First, if I could just go back to the own damage cover, and we're talking about vehicle being damaged due to rain or storm. Now, what all is covered under this, sir? Is it only external damage, internal? Will engine be covered at all? Or is it a separate add-on?
If you look at what we call perils associated with any of these, when you talk of rains, There are not only engine damage, there are various things can happen. Vehicle can skid. When the heavy water is there and the roads are muddy, there is a possibility of a vehicle can skid and it can go and hit someone, or your car can get damaged. Either hitting another car, whatever.
Yes,
that is one kind of it. Or you are traveling somewhere and you have parked your car somewhere. There are heavy winds and
a tree fell on your car.
Can fall on it, or something fell on the glass. Windscreen can break. Plus, you are also, driving and suddenly you saw somewhere water inundation is there, and you are in a dilemma whether to go inside the water. For whatever reason, you drove the vehicle, and vehicle can get stalled.
Yeah.
Usually, what we say is that don't move the vehicle. Don't start the engine, because once water gets into the engine, it gets seized.
Yeah.
The moment the engine is seized, then the damages are very high.
So again, to talk about some of the instances that you took. One is the car skids off, hits the pavement, and God forbid, hits someone or something else. Second is, let's say, an external object falls on the car. Are all of these things covered under the own damage policy?
All of these things are covered, but as engine seize cover is concerned, there is an additional cover you need to take, which is called engine protection cover.
So if your engine seizes because of water getting into the engine, that is not going to be covered by your base
in
policy.
normal basic policy, you have to take the add-on cover, which is called engine protection cover.
Okay.
Plus, apart from that, what we tell is, even if something like this happens, you leave the vehicle, call up the insurance company. We have roadside assistance available. We pick up the car and take it to the nearest garage, for further assessments and such things.
Okay.
In general, the issue is people do start the car for whatever reasons. Okay, it got stalled, and then I'll start the car. Maybe it will move again.
Yeah.
We suggest normally, if engine water goes into the above the tire level, there is always a possibility of water getting into the car. So do not start the engine.
Do not start the car. Try and exit your car. Leave the vehicle standing over there.
And we take care of it. You call up, our roadside assistance will come in and take care of the vehicle, and then we can assess the damages.
Okay, so I think that's lesson number one that we've all learned, that in any case of any kind of external damage or internal damage, just call up your insurance company, and chances are that a large part of that damage might get covered. Just to understand again the basic policy, the own damage policy, what does the fine print say when things like external damage, plastics, wiring, is everything covered? What are the exclusions? Let me ask you this.
All these are covered.
Okay.
But there are certain parts like plastics and other parts, there is a depreciation applicable. So 50% depreciation applicable for plastic parts and such things if you have not taken a nil dep additional cover. There are add-on covers available for you. One is nil depreciation cover, so entire thing gets covered except the minimum excess whichever is there. Otherwise, all the plastic parts, rubber parts, whatever is there, the depreciations are also taken care of in the add-on cover. Then you can take engine protection cover, roadside assistance.
Sure.
Your NCB protection cover, what you call is return to invoice cover. All these are whole of options are available.
The insurance marketplace always has so many options for us, and we're going to talk about a lot of these options. We take a break, so you've now understood the basic own damage cover that one needs to take. On the other side, all the add-ons. If you do want to take extra protection for your car engine in this monsoon season, what are the options that the industry offers? We'll be right back with that. Welcome back. You're watching Money, 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 and this week we are getting you rain ready. I'm not just talking about your umbrellas and your raincoats. I am talking about insurance for your car and your house as well. So now let's talk about the add-on covers, gentlemen, because as we understood that till the time you don't start up your car with water going inside it, you're fine. But if you start your car and there's water in the engine, then you're in problem because your insurance company is not going to cover you under the basic policy. Harsh, you were talking about some specific engine protection covers. What are their features and what is the additional cost?
So, what is an engine protection cover that we're talking about, an engine secure, or any name that the insurance company may give? So, as Mr. Rao said, that if your car is stalled at a level of water which is above your tires, it's advised that you do not try and start the engine, because if there is water, then it tends to get into the engine and there's a hydrostatic lock. The engine will just seize. So an insurance company understands and believes that you're not supposed to do this. Anything that has been caused out of your negligence is not going to be paid.
Sure.
So this is negligence.
Yeah.
Now, in that context, in case you wish to then also cover this, then there's an add-on cover, which is the engine secure that we're talking about. So under this add-on, you pay an additional premium, and the insurance company then covers you for damages that are caused because of this particular incident as well.
Okay, Mr. Rao, the engine protection cover would cover me not just if there's water ingress, but what other types of engine issues which will get covered?
Basically, the hydrostatic lock which happens due to water ingression of water inside the engine. So, engines, the moment water enters, it gets mixed with the hydrostatic functioning, and then engine gets seized. Then you need to open up the engine, and you have to, maybe replacement sometimes. Maybe you need to clean it and then refix it. So this is part of this hydrostatic lock cover, basically. It's called.
You were talking about certain other. By the way, before we move on, the cost. It's money. So if I'm buying these additional motor covers, then typically what are the kind of premium rates?
It varies depending on the type of vehicle you are having. It can range anywhere between 0.25% to 0.35% to 0.4% of the cost of the vehicle. What we call is IDV, insured declared value.
0.2% to about
0.3, 0.35, depending on the type of the vehicle which you are using.
Okay, all right. Any other add-on covers that you found interesting to look at, Harsh?
So let's understand from a layman perspective. The insurance companies definitely have far more elaborate, but 3-4 things that you must make sure as a car owner that you would have. One is a zero depreciation, a nil depreciation that we're talking about, because that has a huge impact. So anytime that your car meets with an accident or is damaged, and if you say that a plastic part is replaced and a 50% cost is gone, so if you're replacing something worth 20,000 rupees, 10,000 will just be gone due to depreciation. So you want to protect that. You want to make sure that if my car meets with an accident, goes into a garage, everything is paid for, and there is no cost in terms of depreciation to me. So one is the zero depreciation benefit that you should add into your policy. The other is consumables. So consumables are those oils and small nuts and all those things which are used.
Filters, etc.
Yeah, so this lands up becoming a reasonably good cost. It may not be a huge cost that you cannot bear, but there is an add-on cover to cover the consumables as well.
So how much more money am I talking about from a total aggregate premium point of view? I mean, say
again,
for a sedan or say for any car.
So I would put it like this. Again, it's a percentage and depending on the car exactly. So the reason exactly, if you're buying a high-end car, the cost of replacing those parts is very high.
True.
The depreciation in those terms will be very high again. So everything relates to what is the cost of getting that part repaired. So it's all as a percentage. So again, we can just look at a range, saying an entry level car would be as the depreciation cover would be charged less, with a high-end car being more.
Sure. Mr. Rao, please do help us out with the rough ranges of these policies if we talk about the zero dep policy.
So it again, as he said, it depends on the cost of the car and the replacement cost, and as you said, lower end car costs a little less, and high end cars have a high expense replacements.
Yeah.
So depending on this, the price varies. It can vary anywhere between. You want to know the what is in terms of rupee, how much it costs. It again.
Even a percentage will help. I mean, if you're talking about a normal, four-wheeler.
It ranges anywhere between 0.4 to 0.6% of
the vehicle cost.
Vehicle cost.
Okay, so that's all about motor insurance. I think that kind of helps us understand how to make sure that we do the right things in case we are in a rain or a storm situation. We need to take a quick break. On the other side, don't forget car insurance. Most of us have by definition, by default. What a lot of us don't think about is actually home insurance. That's a very important subject we will discuss after the break. Welcome back. You're watching Money, and this week we are getting you rain ready, preparing you with the right sort of information on insuring your motor vehicle, your cars or your bikes, and of course even your house. Now, before we move on to home, just a word on two-wheelers as well, because we didn't discuss that in the previous segment. Whatever we've discussed on four-wheelers, does the same logic apply to two-wheelers as well, or any further advice would you give on two-wheelers?
Similar logic applies for two-wheelers, but then the engine seals and such things are very rare in two-wheelers, but similar packages are available.
Okay, all right, fair enough. So now let's move to the subject on home, because Harsh, what I figured was that not a lot of people really think of taking that step and doing a home insurance and talking about the options that are available over there. Do help us understand the basics of it, because I also know that there's a fire policy. Sometimes home insurance is part of the fire policy. So are the two same, different? Is A the subset of B? How does it work?
So let's keep it simple. Let's just understand what you're covering. Okay, so there are two things in your house. Okay, the first is the structure. So you have that building that you're owning, the land on which it is constructed. Okay, so there could be a cooperative housing society, it could be a condominium, it could be anything. So there is a structure that is there. So as a policy holder, if I'm a householder, what I will try and cover is the structure. But in isolation, you can't look at it in isolation because your entire building needs to be essentially covered. So that your cooperative housing society or your condominium will do it.
Yeah.
But in any case, I will insure my, the structure of my building, my house. So that is what you're insuring. Now, when you're insuring that structure, okay, you need to keep in mind, how much do you insure it for? So the question is, I have paid, say, probably 1 crore for this apartment. But do I insure the structure for 1 crore? No, I do not do that, because 1 crore includes the cost of land as well. So what do I insure is the construction cost. If I were to rebuild this house again, how much will it cost? Because land is not going anywhere.
Sure.
Right. So only the structure gets damaged. So that is a reconstruction cost.
Okay.
So if you have a 1,000 square foot house and the reconstruction cost is about 2,000 rupees a square foot, so you'll insure your house for 20 lakh of rupees.
Okay.
That's the insurance for the structure.
Okay.
Then the other part as a householder is the contents.
Inside the house.
So I have furniture, fittings, and all those fixtures that I have. So I want to insure that. Now what do I insure that against? Against which perils? So it could be because of fire. The damage could be caused because of fire. It could be caused because of waterlogging. It could be floods, tempest, inundation that we're talking about.
Earthquake, whatever.
Floods, and it could be theft. It could be burglary. So we'll try and cover that. Whatever valuables, whatever furniture fixtures I have, I want to insure that.
Okay.
So that is the other part of it. Now both of this can be bought together.
All right.
So there are two parts again. So as I said,
the structure and then the contents of the house.
Yeah. So the belongings and the structure both can be bought in one policy itself, or you could have separate policies as well.
Okay. I get that. Let me also bring in Mr. Rao on this. So sir, does that mean that the so-called fire policy, that's basically a part of comprehensive home insurance?
Yeah, see, there are two ways. As I said, one is a fire policy, basic fire policy, what we call fire insurance. In that you can cover the structure as well as the contents of the household items. And the other one is a comprehensive policy, what we call home insurance, where you can cover fire policy and the contents along with it. Plus you can cover your contents for burglary, and then your all risk jewelry and such items also, and a comprehensive policy, and liabilities and such things.
But when one says fire policy, typically that includes only the structure.
Structure and the contents also.
And the contents also.
For fire, but fire doesn't mean only fire insurance. It takes care of your flood, earthquake, One of the, we are discussing about the rains, subsidence landslide is also covered under this policy. Leakage and contamination of pipes, the breakage of pipes, water ingression happens in the house and it gets damaged, that is also covered under this policy.
Okay.
Riot and strike is also covered under this policy.
Riot and strike.
Yeah. Okay. So if you look at in a fire policy, there are multiple perils covered. Flood is one of the flood, storm, inundation, cyclone is one of the covers along with it. Earthquake.
I wonder why it's called a fire policy. Why isn't it just called a home policy then to make it simple?
Home policy covers many more things. You can have multiple covers in that.
What are the add-ons that I get in a home policy?
It's called section 1 is burglary cover you can take.
So if you want burglary cover as well, then not just a fire policy, you need to go for a comprehensive policy.
Burglary and theft you can take. You can take your electronic equipment under all risk policy. You can take public liability. You can cover your servants for workman compensation.
Okay.
So public liability is policy one of the covers. You have a huge
liability policy.
Yeah, you have a huge window. You are in high-rise building due to rains and heavy winds. Window can fall on someone down. That can also be covered.
There's sort of for third-party damage because it's there for public liability.
Public liability.
Okay.
So that can also be covered under home policies.
Okay.
It talks of only coming back to flood insurance. You can simple fire insurance also will take care of it. You can take the comprehensive policy also.
Are these covers very sort of widely sold? Is there a lot of acceptance, or what do you see across the industry?
Fire policy acceptance is there, but comprehensive policies still has to catch up.
Okay, okay.
Despite seeing so many calamities in India, if you see almost every year somewhere or the other floods have happened. Chennai, Kerala, earlier Jammu and
Yes.
Kashmir,
Chennai, we
Mumbai
remember,
floods,
yes, Mumbai.
rains happen.
Yes.
But still it has not caught up as it should have been.
Is a fire policy mandatory by law, like how we have in motor insurance?
No. Fire policy is not mandatory by law.
Is that a surprising thing? I mean, considering that, a home is such an important asset, I'm surprised it's not mandatory. But what would your advice be? I mean, how should one definitely go in for a cover in any case, Harsh?
Yeah, so as we rightly discussed that it was not mandatory as per the law, but in case you're taking a housing loan, then the financer is anyways getting this insured. So he's insisting upon, you buying a householder policy, covering the structure and contents. But as I said, if you look at the house in isolation, it's not really serving a purpose. Because if your structure of your building is collapsed, so suppose you're on the 4th floor in a building, you buy the structure insurance of only your house, which is 1,000 square foot. And if the building, something affects the building completely, you can't just reconstruct yourself on the 4th floor, right? You'll have the entire building to be reconstructed back. So you have to encourage your housing society
to
actually buy
policy.
the fire policy for the entire building.
Right.
And then you are a part of it. And also then you take the extended policy of covering yourself for the household,
the contents,
the contents of it. So which could include jewelry, include the glass items. Electronic equipment is a very interesting coverage because you have all such expensive televisions and electronic gadgets being bought these days. That covers under mechanical and electrical failures as well.
So let me just clarify that. Now, if you want to cover your electrical gadgets, that's not going to be part of the fire policy. For that, you need comprehensive home insurance. Okay.
But you can cover contents for fire insurance, these items also, but not for electrical and mechanical breakdowns.
Right. So basic home contents, fixtures, fittings, those kind
even
of things.
electronic items, electrical items, you can cover for a basic fire policy, but the damage due to breakdowns are not covered under basic fire policy. But you need to take a all risk cover, electronic equipment section cover under comprehensive policy.
Okay, so you see the plethora of options. As always, I'm going to now boil it down to the cost because all of this comes at a cost. So, as Harsh mentioned that if you take the same example, if your house value is 1 crore and you're going to take a fire policy worth 20 lakhs minus the cost of the land, then what kind of cost am I talking about, and how to set the numbers, because not a lot of people know how to value the contents of their house. So what would be the right cover to take?
See, the right cover to take for contents especially is on a reinstatement value basis. What is new for old.
Okay.
So you need to estimate if you bought a television, for example, say 3 years back, you want to replace the television today, how much it would cost. Probably that time would have bought for 10,000 rupees today. Similar may cost 8,000 rupees, may cost 15,000 rupees. Depending on the item. Electronic items would have come down, some of the items would have gone up. So the furniture probably would have gone up. So you need to estimate on that basis and go for a reinstatement value basis cover, so that if anything, any eventuality happens, you will get new for old.
Okay, so now again to simplify this, let's talk about a regular 1 crore apartment in one of the Indian metros. Layman's language, what kind of a comprehensive home insurance cover should I take, and what would be the likely cost? I'm talking about tier 1 metro cities in India.
If you are talking of only fire insurance cover, it's one of the cheapest covers, I can say. It will cost you 30 rupees per lakh of sum insured.
30 rupees per lakh of sum insurance.
Average I'm giving you. If you are going for a comprehensive policy, it depends on the number of sections you opt for and the sum insureds you take for the content and such things. Again, the fire cover would cost you, but overall, if I say if the entire contents, as you said, is around say 50 lakhs or 1 crore of rupees, it will cost you anywhere between 5 to 6,000 rupees per annum.
Oh yeah, considering the kind of coverage that you're getting, it's not that big a price. Maybe something you definitely want to consider, Harsh?
That's exactly one of the reasons. This is also one of the reasons it's not being sold. Because the commissions that are earned is on the premiums that our individual pays. So if your premiums are 5 to 6,000 rupees, how much is the commission a person is going to get on that? So that is why there is a lot of demotivation for anybody to go around and actually solicitate this kind of business.
And now we know, through the course of this conversation on money, that options are available, not just for your car, but even for your house, and very comprehensive covers. The question is going ahead and engaging with your insurance company to see what best suits you and what fits your need. Thank you, gentlemen. This has been a very enlightening conversation. Thanks for joining in and answering all of those queries. Well, that's it on this week's episode of Money, Money, Money. We hope you've got some valuable takeaways and tips from our chat as well. We will see you again next week.